Hi there guys, it's Jono here with our April investment market update, and I hope you're all doing well. I just want to keep you abreast of some of the thoughts that we've had in the last month or so. Fortunately speaking, we've had a really strong rebound back in markets, perhaps as strong as the sell-off was through February. We saw the rebound back through March and now into early April, up over about 20%. Still in Australia, we're down mid-teens, which leaves us still underperforming international markets, which in Australian dollar terms are probably only down about 7% or so. The fall in the Australian dollar has helped portfolio investors here in Australia. Whilst it's encouraging where we now are around the world in terms of now flattening the curve, which is a term that I guess we're all a bit sick of hearing, and certainly here in Australia in a relative sense, I think we're doing a really terrific job. It's very hard to get overly optimistic about the coming couple of months, particularly since the exit from quarantine, I think, is likely to be staggered, and particularly given the huge amount of cash flow impost that's occurred across governments, corporates and household balance sheets in the last couple of months as the economy stopped. We've talked a lot about over 20 million new Americans applying for unemployment benefits in the last month, and that number will continue to rise. In Australia, the ABS is suggesting over 500,000 people lost their job last month as well, which is about 3% or thereabouts of the workforce. These things are not going to go away quickly, particularly given that, as I say, our exit of quarantine is going to be very slow and staggered, and it's probably likely that we will see further flare-ups at some point in various countries, which will mean that we will need to again maybe get to more strict quarantining measures again at some point through 2020. We continue to have the view that, again, there's just too much leverage in the system. We're watching the corporate bond market very, very closely. There is a raft of downgrades to come through from major ratings agencies in the coming couple of months due to the cash flow decimation that the quarantine process has made. The oil market is not helping matters either. The collapse in oil prices to $20 a barrel or thereabouts is not going to help markets in general, because about 10 to 12% of the high yield bond market is in energy related names. So there is a real knock-on risk potentially there in corporate bonds. But more broadly speaking, I just think that the huge impact to consumer psyche, to business attitudes to risk and capital investment is likely to mean that it's going to be a very slow rebound back to normalcy, if in fact we can achieve that, until such time as we see a vaccine. We are endeavouring to hold as much cash as we can. We're endeavouring to upgrade the portfolio, particularly on the Australian equity side, to one of a more defensive nature. We've got a lot of cash, but we did go into the start of the year with a cyclical bent. And we've needed to redress that, and I'm very hopeful that we'll be in a much better position in the coming couple of months as we do make amends in some of those areas. But on the whole, I hope everybody's really well. And any questions, please do come through your advisor. Thanks.